always volatile. One day you're smiling, the next day you have tears at the corners of your eyes. So it's always like that when it comes to oil prices. And this week we've seen, towards the end of last week, of course we're all thinking $52, $53 a barrel will be okay. We're all happy. Right now the market started Monday heading south. So let's get a sense of where we are in Nigeria regarding this crude oil attack going to be from financial derivatives. Thank you very much for coming. Good morning.
Good morning.
We appreciate that. Right now, it looks like we're trading back around 50. It looks like 50 is the price of oil. We should just go home and say, look, we're not just going anywhere around well above 50 before December the 31st.
Well, oil prices have remained stable between $50 to $51 per barrel because mainly the market is not more skeptical about some sort of output freeze in the next meeting in August. So there's just that whole sentiment still driving oil prices. The OPEC production in September was about 0.6% higher than figures in August. Iran has said that they're still actually going to continue to increase production, so as other countries as well. So that's just why oil prices are, going back and forth. They don't have a steady ground yet.
What's the story from Nigeria's side of things? Whatever happened in November is a different thing. We're not going to be part of that. Thank goodness that at least we have a breather, Nigeria, Libya, and I think one other country were exempted from the Algiers decision in September. But the key issue for Nigeria is that we haven't been able to pay as much on our joint venture calls. We're looking for money. Nigeria's Deputy Minister for Petroleum Resources, Dr. Kachiko, was in India asking India to pay $15 billion upfront for oil imports that India will make. India is a major partner in terms of that. In return, Dr. Kachiko was saying, look, perhaps we can get a government-to-government relationship, help us with our refining, help us with the E&P or exploration and production. Put all this together, that looks that right now we are practically on our knees, going around the world, cap in hand, saying, look, we have a bowl here, put something in here, we need help.
Well, like you rightfully said, the $15 billion contract between Nigeria and India is because our reserves are depleting further, and like you said, the Minister of Petroleum has called out to India, look, I'd like you to pay up front so that we can try and shore up our depleting reserves and meet some obligations, some cash call obligations, and cash call investments. I mean, India has agreed to that, and they're currently negotiating and working on a memorandum of understanding that will specifically involve India's involvement in the upstream sector in the oil and gas refining process, development of gas infrastructure, and training of oil and gas personnel as well. So that's a very good sign because India, like we know, is the largest importer of Nigerian crude oil, followed by the US. So that's that's a positive
development. It's natural for us to go to the Indians and say, look, and Indians do have some good refining capacity. Yes. They can help us with the 4 refineries that are suboptimal at the moment.
Exactly, yeah. So we expect to see, and that's expected to kickstart in December 2016. So that's good news. On the other hand as well, the minister has said that our production is expected to increase by 22% to original benchmark of 2.2 million barrels when force majeure on most export terminals are lifted, such as Kwa Ibo and Forcados. So I mean, that has taken about 600 or approximately 700 million barrels, 700,000 barrels off.
We're in October. We're in October. We've been going up and down on these facilities since February, when Forcados was first hit. This is October, 10 months down the line. If you're not careful, we're looking at November, December. Is it really feasible? What's the word on the street in the industry that likely we're going to get this key export points up and running before the 31st?
I'm sure industry experts in that sector are doing all they can to bring Nigeria back to its feet, but then we still have the constraint. There's still a risk that the Niger Delta Adventures could strike again once production comes back up. So it's like silence in the graveyard. Nobody really knows. There's no agreement. They haven't said, that Nigeria and the federal government and Niger Delta have agreed on, so they're still, so we're still working on eggshells basically. But hopefully there's some sort of agreement. Our production comes back to 2.2 million barrels per day. We take advantage of oil prices in the market, then we can start to build our revenues that have been slashed by 60%.
Isn't it really amazing that most of our onshore were the most affected by these militant activities? Part of our sharing contracts for oil are those that are offshore, high seas, the little bit bit far away from the militants to punch.
Yeah, so they can't reach they can't reach the offshore and you know, deep sea shells or whatever, but they can obviously reach the ones on shore. That's why they're doing the most they can. But then, I mean, we need to understand that that's affecting everyone as well. Even the militants will suffer from what's going on in the country. It's a collective effort. We have to come together to make this better.
It's a very difficult and very tenuous situation for now. So what's the outlook? Finally, what's the outlook in terms of short to medium term, where our price of oil will be? You folks say at FDC says 49 to 51. That looks like we're locked into that price band, as it were, short term. There's
still going to be a lot of volatility and uncertainty in oil prices. We need to remember that U.S. rig counts continue to rise. It's increased for the 16th consecutive month. Although there was a drawdown in U.S. crude inventories, we need to see a massive or significant decline in inventories before we can see prices escalate. But for now, oil prices will trade between $49 to $50 per barrel. The next meeting is coming up in November. Then we should have some sort of quota cut. If each country will be given, you know, a specific production quota to meet, then we will take cues from there. But then the oversupply glut is still there. The Energy Institute has said that our world oil demand is still lower than world oil supply. So, but then if this oil freeze agreement happens, we would see demand and supply somewhat having an equilibrium.
Balance. Yes. Thank you very much. We appreciate your coming on the program this morning. Ada is the Senior Investment Officer at Financial Derivatives. We'll continue this conversation, oil from the analyst's point of view, from investment analyst point of view. Ibrahim Babalola is the energy analyst at Afrinvest. Afrinvest is an investment and securities firm licensed by the SEC and the NSE, doing business in Nigeria. Ibrahim, good morning. Thanks for coming through via Skype from downtown Lagos.
Morning, Boston.
Yes, you've heard a few of the things that Ada Akonobi has spoken about the Nigeria's industry. One good news that seemed to coming through this morning was this deal with the Indians, $15 billion for the NNPC. That looks like manna from heaven.
Rightly so. Rightly so, boss.
Yes, it is. It's a big manna. $15 billion, that's a lot of money on the table. We can use that.
Yeah, $15 billion.
Now, the question is this, Ibrahim, don't let me take much of your time smiling here. What do we have to give for $15 billion? How much of our future business in refining, in exploration and production are we giving the Indians for giving us $15 billion upfront?
It's an upfront payment of crude. India currently gets about 12% of the total crude imports from Nigeria anyway. So it's an upfront payment. Obviously, the modalities, they're still going to work out the modalities of the agreement in December on how much crude, at what price they're going to buy the crude. But then what we also need to look at the other aspects of the MOU, and that's the investments that are going to come into the midstream sector, the refining sector. You know, they're also looking at coming with investments, you know, trying to invest in our refineries. So when you look at that, and then you also consider what Dangote is doing with the Dangote refineries. I think Dangote refinery has capacity of about 650,000 barrels per day. That works out to about 103 million liters per day. You know, which when you look at our daily consumption of 50 million liters per day, which would totally take care of our daily consumption. So when you add the Indian investments in that sector to what Dangote is doing, that will totally cater for our petrol consumption. And we even have we have enough left to export.
Okay, so in summary, Ibrahim, it looks like this is a good deal with the Indians. Kudos to Kachiko and the government. We have a deal on the table. Would you say, for now, until we get the details of the MOU in December, this looks like a good deal with the Indians?
It looks like a fantastic deal. Obviously, the modalities have to be agreed. They will work out that, and they'll do that in December. Nonetheless, I mean, $15 billion to add to our extra reserves. I think our extra reserves are what, 24.2 billion at the moment. When you add 15 billion to that, that works out to $39.2 billion. So it is good news for us.
What would you think, where do you think Dr. Kachiko and the group managing director of the NFPC will be putting part of this $15 billion as soon as we get them, we can withdraw down on them? Where should they be putting this money in our upstream, downstream, mid-level industry?
Well, again, I think it be spread across sectors. A lot of the investment has to go to the midstream. You know, we need to be refining more than we're doing at the moment. Majority of our dollar demand, dollar pressure is going to petroleum importation, you know, and once we're able to refine a majority of what we consume, that will free up dollars for other critical sectors of the economy.
Do you think any of these should go into outstanding subsidy payments?
So, no, we can't go back to subsidy.
No, I just wanted to punch you on the other side. I'm sure you're going to say no. Okay, so I'm sure our friends to the other side of the planet, the Europeans and the United States, will be watching this deal with the Indians. And to the far east, you have the Chinese. The Indians are in the middle, the Indian subcontinent. I still remember geography. So how do you think our traditional allies in the West will be taking this relationship, considering the fact we came back a few months ago from the Chinese and they were also promising money, they haven't put any cover on the table? Do you think the Indians will beat them to it this time and we'll just work with the Indians for now until we have the next tranche of investment support coming in from the outside?
You know, I think we need to be taking the conversations to as far as we can. We are in need of these investments, and they can't all come from the same source, you know. So we're talking to the Indians, and we're talking to the Chinese, and we're talking to the Americans. As long as the investments come in and all parties are happy, I'm sure everybody will be fine.
Okay, so as far as you're concerned, you don't really care about where the money comes from, really.
As long as it comes in, boss.
Yeah, because we are the one who's on his knees right now looking for the money. So we might as well take it from anyone. But what do you think Nigerians will want from this deal? Before it becomes a very noisy conversation all over again.
Again, Nigerians will want to see the completion of this deal. You know, we're still waiting for the Chinese, for the investments from the Chinese guys, you know. So I think what a lot of people will be looking at is to see that we actually see this transaction through to the end, so that it doesn't just come out to be, we're gonna agree to these deals and we're gonna set out the terms and we're expecting this money, and it will never come. So I think the important thing is to see this deal to the end, agree to the terms and work out the modalities and get the investments in.
Okay, do you think we should pay part of the joint venture cash calls? According to a report in from FBN Quest this morning, we've paid between January and July $1.93 billion. We still have about $4.99 billion outstanding. You think we should take part of the Chinese money and pay the IOCs?
Well, I mean, again, a lot of that is at the discretion of the Ministry of Petroleum Resources, where they want to channel the investments in. But from the press statement that I've seen, the $15 billion is for midstream investments. Some are going to the upstream investment as well. I don't think there's anything from that press statement that suggests that we'll be using some of that to clear out our standings with the IOC. Okay,
Ibrahim Babalola from AfroInvest, energy analyst. We got to let you go at this point. Thank you very much for shedding some light about this $15 billion, where it should go, where it shouldn't go. Thank you very much. Do have a great day, and see more of you on the program in the days and weeks ahead. Let's take a break. When we come back, Victor Diaze is a man who's been involved in the new code of corporate governance that's now unveiled yesterday by the Financial Reporting Council. He's live here in the studios with us for the next 15 minutes to take us through the journey and where we go from here.